All right, KLA Corporation, KLAC on NASDAQ. I just want to bring this one up that I've talked about many times. But an opportunity because of the pullback, so I'm just reminding people, so this is going to be a pretty quick video. It's an opportunity. I want you to jump in on it if you can. I do want to bring up the model, of course, because that's where it comes to light a little bit. And here you see, like, the number one thing is forget the green over there, which is always nice, but what you really want to focus in on is how good is the company. And you'll see from 2012 on, or 2013 actually, 11%, 11%, 12%, 15, 17, 20, 22, 25% return on invested capital. I would say 90% of the time, if you get a profile like this, by the way, you don't find too many profiles like this, but if you did, climbing like that, the stock is going to be climbing at a substantial rate as well. So the 5-year CAGR on this is 20%. That's phenomenal. You'd more than double your money in 5 years if you get a 20% CAGR. I think I want to, oh yeah, let's look at the financials directly. There we go. So I really want to point out here was the revenue growth. So this top line is compared to the same quarter. So this is September 18th. So we're comparing it to September 17, and it was a 12% growth, and then 14%, and then 7%. So a little bit of a lull there. And that the industry was going through a lull, and their lull was 7%. The rest of the industry mostly was negative. Okay, and it was supposed to be slow in Q2, and they had 17% growth. Supposed to be slow in Q3, 29% growth. Supposed to be slow in Q4, 34% growth. I mean, in terms of top line, you just don't get any better than that. You don't get any better than this kind of profile of growing your return on invested capital. Valuation wasn't too hard. I tweaked the fade a little bit, but still a substantial fade is still built into it, which is conservative. This stock did hit about 180 something. I'm not sure exactly, but 180 something. Pulled back, went down to about 145, maybe low 140s. It's now 154, but still down 3% in the last 3 months, down 6% in 1 month. I mean, it's already, there's barely an opportunity there. You know, there was a pullback along with everybody else, but it didn't last. I mean, well, okay, hold on. It was 180. It's still 154. Okay, I still think it's better though. It's better than 180. It can go much higher, because when it was 180, we didn't even have Q4. Now we have Q4, and it looks even better. This is phenomenal. I mean, I've already gone too long. I wanted to do just a quick reminder for people to get into this, because it was an opportunity. It's also a semiconductor equipment maker, so they don't actually make the semis, but their equipment does, and their equipment goes into an Intel, into an NVIDIA, and those will be their clients. They also put their own people in, so they actually get recurring revenue by having their people there. You know, it's highly scientific, technical stuff. We're talking about measuring things down to nanometers. Their equipment is like that finely tuned. It's a big part of their business is error detection down to like 10 nanometers, which is super, super tiny. Anyhow, it's a fantastic company. Numbers are great. Opportunity on this pullback. You really got to take a look. If not outright, just pull the trigger. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.